So let's start with, your views around what you said. And you, of course, you are the CEO of a very important financial services company in India. So in the context of what the CEO said, what's your view on the economic future of the country? Which way are we headed?
So, look, I mean, so where I'm sitting, I mean, I'm old enough to be born at a time wherein the aspiration was really a government job and a Maruti 800 to where we are today. And if you contextualize this, India's GDP in 2000 was about $500 billion. Today's Delhi's GDP is evidently about 40 to 50% of that, 200 to 250. We reached 1 trillion in 2007. We supposedly have hit 4 trillion today, or likely to hit 4 trillion sometime in the course of this
Almost
year.
there.
Almost there. And the next trillion, like Mr. Nageshwaran pointed out, will take about 3 to 4 years, and then we should add about 2 trillion every couple of years. Now, again, the context is important. You look at a state like Maharashtra today, and Mr. Nageshwaran did speak about Tamil Nadu, for example, even Tamil Nadu for that matter. Maharashtra is today currently the same size as India was in 2000. Tamil Nadu is about 300 billion.
Indeed.
Delhi is about 200, 250. You're talking about Maharashtra alone being probably a $1 trillion economy in the next maybe 5 years. Delhi may be a $1 trillion economy in maybe 7, 8 years. I mean, I think context is important in that sense. I mean, in 1990s, if somebody had told me that, China would be bigger than the European Union in 30 years, I probably wouldn't have believed it, right? So, I mean, honestly, I see no reason why the future isn't as bright as it's made out to be. When people say that we'll be the third largest economy by 2060 or the largest by 2070, it sounds fantastical today. But it equally sounded fantastical in 2007 if somebody had told us that in 20 years it'll be 5 times the size. So I'm optimistic.
Yeah. Well, GDP size is one thing, and living standards is another thing, which comes through GDP per capita, where we are actually lagging, which is one of the roadblocks, really, as we look to become a $30 trillion economy, and Viksit Bharat and an advanced country. But, that was my view of one of the roadblocks. What are your views on what do you see as the potential roadblocks in this aspiration to be a $30 trillion economy?
So from where I'm sitting, and let me confess, I'm not a macroeconomic expert or an expert of any kind. But see, I think that there are two parts to it. One is obviously the geopolitical risk. I mean, the fact is that given the heft we have today, and I was having this conversation in the speakers areas with some time back, the side India takes really matters. Who we put our weight behind or don't put our weight behind, or to what degree we put our weight behind matters. Now that comes with its own set of complications. The sides we take in global conflicts or the conflict we have in the immediate neighboring area has its own challenges. So one is obviously geopolitical.
Right.
The other is, again, and this is purely from where I'm sitting, I think there are two large issues. One is that some of the reforms are predicated, some of the GDP growth is predicated on continuing enablement and reforms. So if you look at what the government has done with, say, the JAM Trinity, right? That, as people call it in the bureaucracy, it's laid the digital tracks for super fast growth, and it's really helped. And I think its effect on the economy is vastly underrated. And you realize that actually when you travel lots of India, and then we see a lot of things which you take for granted here, are not so easily available in the rest of the world. That's one. The second is, some of the other reforms. For example, there have been attempts. On labor, obviously a lot of laws have been subsumed under 4 broad codes. Land reforms haven't really got through, they got stymied. Agriculture needs some kind of reforms. The fact is that on accretive basis, more people have started joining agriculture over the last few years, which wasn't the case for till, say, I think about 2017, as I understand it. 45% of India's workforce is still with agriculture, it's 15% of our GDP. Now that requires some kind of reforms. I think some of the incentives are perverse, wherein farmers grow crops which may not be really good for us, right? So I think some of these reforms are necessary, they need bipartisan support, and that could really, I think we take for granted that when we move towards a 30 trillion economy, some of these would be taken care of, but may not necessarily be the case. The other part really, in my opinion, is the administration. I think the quality of people you deal with at very senior levels in the government is fantastic. Very enabling, very supportive. But for a lot of us who have to deal with local municipalities or urban bodies or panchayats, the competency gap between people at very senior levels and people who are operationally dealing with the people on the ground is massive. And somehow we've been able to subsidize that inefficiency by the use of technology. You have a problem, you go on Twitter, you complain, things get resolved. But somewhere that competency gap also needs to be addressed. So, I don't think the quality of governance, especially at the local level, is consistent with the $30 trillion aspiration.
That is true. That's been a very common strain, all through. And subsidy of, what did you say? The
subsidy of the inefficiencies at the dealing officer
subsidy
level
my
has
God,
been, it's through technology really, right? The fact is, if you don't get heard, the immediate instinct is to go on Twitter and then complain, and then it gets resolved in like 30 minutes.
So one of the things the CA also said about well-intentioned policies, well-intentioned policies that actually don't get carried out very well because of the lower levels having a different kind of vision from the ones at the top. So let's come to your industry, right? Insurance, and it's a very important and key industry. There is no doubt that India is the world's fastest growing major economy in the world. What does that mean for insurance?
So, insurance is a unique business, right? It's both a beneficiary of economic growth and a driver of economic growth. So let me explain that. So obviously, we normally see the industry grow at 2 times the GDP growth, real GDP growth, or, maybe 1.25 times the nominal GDP growth, right? So we obviously get that advantage. We leverage that more cars are sold, more scooters are sold, more people want to get into the healthcare force, more people travel insurance, so on and so forth. The other is, and people don't probably realize that, when it comes to things like inventory, transportation, factories, raw material, people, all the factors of production or all the capital, your ability to deploy them depends on insurance. It gives you the appetite to take that risk. And that's where we become a driver of growth. So the fact is that somebody puts out a few hundred crores to set up a factory. The fact that he's able to allocate a small percentage, a decimal percentage of that outlay towards insurance, make it easy for that person to take that risk. Right. We help in creating a virtuous capex cycle. I think that's what the industry does. So even for the individual, for example, in case you look at yourself as an asset, the fact is you want to leverage it by buying a house. You probably want to take an insurance so that, nothing goes wrong over the next 5, 10, 15 years. However long the policy runs out. If you are an asset, you want to make sure the asset is in a position to continue to earn, health insurance comes in. So in that sense, it's a unique industry, and I think, so like I said, that that not only do we benefit from the GDP growth, but we also, are a catalyst towards it.
Yeah, that's true. But at the same time, general insurance is still about 1% of India's GDP, right? Which is rather low. So does that mean that the industry really hasn't done as well as it should?
So I think that's a lot of criticism we get. I think somewhere you might have a point, but then we miss one thing. So some interesting data for you. In the last 10 years, India's population growth has been less than 10% or around 10%. But the number of new policies have tripled in the same period.
Okay.
Now, if you look at the average increase in premium per policy, it's at a CAGR of about 1.3%. So all the growth has come from new policies. A more fair metric really would be how has coverage improved, how much cover has gone up. Now, in case you look at those numbers, I think we have done very well. The fact is, premiums have become cheaper. If you look at motor insurance, for example, which most people in the audience are familiar with, motor OD premiums or road damage premiums are pretty much stayed stagnant for the longest time. At the life side, look at term insurance, the premiums have actually declined, despite the fact that you had the COVID effect and then there was hardening of reinsurance rates. Now, in the context of cover, I think the penetration is far more than it's reflected in GDP. As a percentage of GDP. To give you another example, if I may, is telecom. In case you look at telecom revenues as a percentage of GDP, it may not be as impressive, but then if you look at mobile telephony or penetration, the numbers will tell you a different story. India's penetration is fantastic. We all know that. I'm sure Mint's done a couple of stories on that, but then, I think we have done a remarkable job in a relatively short period of time. So, GDP, premium as a percentage of GDP, in my opinion, may not be a fair reflection.
There's also something about the Bahubalis of the future that you've mentioned in the annual report, right? So, what does that mean? And we are all very interested in Bahubali. Maybe you can just explain, share that with the audience here.
So I was just reading somewhere that the number of people with wearables is about 500 billion people today.
Okay.
And this year, evidently, 500 million, not billion. And this year, about 600 million people, more wearables are expected to be sold in 2024. So the point is that, most of us have a smartwatch most of us use pods. In some sense, we are already using bionic devices. They may not be attached to us, but the fact is, that we are using them. One thing which actually has fascinated me over a period of time is that, I know a lot of people who use, continuous glucose monitoring devices. And they are not diabetic, but they use it because they want to understand the insulin spikes and therefore avoid foods because insulin is a fat-releasing hormone, so, to manage their health better. You look at how heart rate is measured today, now it's a sticker which goes to the heart. It's not a Holter, it's not complicated. So there's Bluetooth which actually reads it. My hypothesis is that at some stage, some of these will get embedded in human beings. You talk about Elon Musk and the neural link, for example, wherein, the blind can see, people who have, who are handicapped can actually, the motor functions can be taken over with neural links, wherein the thoughts can control whatever motion you might want, whatever you're interacting with. There's also experimentation, for example, where they're saying that based on how the vital parameters are on the device you're wearing, you could have another device which actually releases, medication. Okay. Now, I think the human being might be hybrid over the next 20, 30 years, and which has implications for insurance. Would you cover the devices? Would you not cover the devices? If a device goes bad, is the person covered? Plus, obviously, you have that issue about people living longer, but then greater morbidity, right?
Correct.
People are likely to, like they say that, most people born now will live till 120 or beyond. Not most people, some people. It has implications for, for insurance, especially because morbidity seems to be going up. People live longer. I think need to be supported to live longer.
Yeah, absolutely. Very interesting. You've also talked about, in the past, you've talked about the future of insurance being driven by micro markets and micro segments, right? So, what does that mean? Maybe you can just explain that to us a bit.
So, I think Henry Ford said this, right? I don't know whether it's anecdotal or real, but then he said you can have a car in any color as long as it's black. So he evidently said that over a century back.
Yeah.
But I think today there are two things. One is big data, the other is technology. Big data makes it possible for us to customize products for customers. By customers, I mean unique customization for that individual. Not for a segment, not for a group, not for a cohort, but it's for that individual. And while you do that extreme micro-segmentation, your ability to deliver that is also improved because of technology. Now, I think, and we see that even at a workplace, in case I can go there, because that, I think Mr. Nageshwaran alluded to it, right? And I think that's an interesting point he made, that that you have AI, you have labor share, and then you have fiscal prudence. Now, when I talk about we talk about people being hired by us today. Everyone wants a unique proposition. Earlier it was that, want to hire a particular individual, he fitted a particular template, he fitted a particular template. But the template has changed. Everyone wants a unique contract. Everyone wants a lower salary but wants work from home. Everyone wants to work at their own pace, using their own tools, certain hours a day. Now, I think, individualism, I think, was seen as a typically American trait, but I think it's percolated to most of the world. I think be it employees or be it customers, I think that hyper individualization is a reality. And then I think companies have to cater to that, not just to customers, but also to everyone else they deal with, including employees, is my take. And I think, and in case you're able to do that, we'll be able to leverage resources better. I think one of the problems organizations have, and again, taking up from what Mr. Nageshwaran said, is that, that we tend to, kind of confuse culture and values with personality. And when you want people who adhere to a particular culture or value, and we somewhere retrofitted to a particular kind of personality which you want to hire. And I'm not sure that they're really related. So my take is that when it comes to hyper customization, and if I look at an employee as a customer as well, what are we really doing? We are saying that we can get certain kinds of personalities on board who are consistent with values and culture, but the personalities are not the same and therefore they have different requirements. And if I extend that forward to the customer, it's the same thing. And does hyper customization also help me target customers at an individual level? If there are 10 people here in this room, can I target it from a marketing perspective, everyone individually, uniquely? I think the answer really is yes, given the kind of data we have and the kind of technology we have today.
But is that not going to raise your costs for the industry? Hyper-personalization.
So technology at scale eventually does reduce cost. I mean, that is, again, the hypothesis that's borne out in the past. I mean, in case you were to look at the first computer, it was costing millions.
That's
now,
true.
Now, I mean, you get a smartphone for less than $50. So, I mean, I think technology will make that possible. But the point is that technology makes some of these things possible to give a more customized experience to everyone that you deal with in the environment.
Yeah, and it's there in every industry, especially the customer-facing industries, even in retail and all. Hyper-personalization, we are seeing it all the time on our phones. In e-commerce, you search for something in Google, it suddenly shows up on your e-commerce site.
It's interesting you say this because, you know, on some social media accounts, I have 2 social media accounts on certain platforms. Just to share with you, and based on the followers I choose, I mean the people I choose to follow rather, the feed I get is completely different. Now, if I look at both accounts, my view of the world could be very, very different. I mean, it's absolutely insane and bizarre. You know that, you know, I have a completely different view based on the people I choose to follow on what's happening in the world. So, I think at least social media has figured out hyper customization much better than some of the traditional industries have so far. They do cater to your biases, which may not be a good thing, but it also gives you the ability to actually do targeted marketing, and maybe in a good way. It has implications for healthcare, for insurance in a positive way, for delivery of government services, for example, in a targeted way, law and order, so on and so forth. So I think there's an upside if it's used well, but like everything else, technology has its plus and minuses.
Okay. So there is also the criticism that insurance is an unprofitable business, right? And the combined ratio continues to be high, and that at some stage this will have implications on the financial health of the industry and even claim settlements.
So I think most shareholders see profit as fungible, whether it comes from investment income or from underwriting. I think they're indifferent. I think in India, we are uniquely placed wherein the AUM by itself, the interest is able to generate profit. While the combined ratio may be high, the fact is that most of the insurers at scale, you know, the top 10 insurers at least, or maybe even the top 15, most of us are profitable. The profit may not come from underwriting, it comes from the AUM. So, and I think given what we first discussed about the long-term prospects of the country, I think a lot of shareholders, the mandate is that can we right now do some land grab, get growth, get customers, and worry about profitability in the pure sense much later. And I think that's also, and that strategy is not wrong, but it's also reflected in the valuations Indian companies have, you know, right? So I think a lot of smart people who do value companies. As far as claims is concerned, again, one data point for you, I think between 2017 and 2024, and I'm using 7 years because I think, you know, because the industry has different profitabilities in different years. Because COVID, we had low profit. In other years, we had extraordinary profit. But the cumulative profit in 7 years for the industry was, I think, about 16,000 crores, if I remember right, 15,900, 16,000 crores, which is about less than 2,500 crores cumulative profit per year. During COVID alone, we paid out 25,000 crores, which is 10 times the annual industry profit. So I don't, and which 20...
But COVID comes once in 100 years.
No, but I'm just saying that we had the appetite to do it. And if you look at, finally the customers are getting a better deal. And I think there are 25 GI players. There are some standalone companies. There are some specialist companies. There are life insurance companies. There are 60 players in the market. It's very hard for the companies not to give the customer a fair deal. And also, let's bear in mind that IRDA is pretty careful. The regulator is pretty careful about who they give a license to, and they do keep a watch on whether the customers are being treated well. I mean, their reason for existence is customers. I mean, it's not. So, I would not kind of agree with it. I think the industry is more than fair. I mean, and given the fact that I work for an MNC which has presence in a lot of countries, I mean, I know for a fact that claim settlements in India are fairly robust.
Awesome. We are out of time, but I can't let you go without asking one last question, especially in the context of this whole theme of this event around Viksit Bharat and all, which is that in terms of the insurance industry, what else do you think that the government, regulators, and insurers like yourself can do to increase penetration of insurance in India?
So to be honest, I think the regulators have done a fantastic job. I mean, and especially under this regime, there have been a lot of far-reaching changes. There's been reduced reduction of compliance burden. I think they've given more to the insurers to manage. Product filing and approval is far easier. There's more autonomy given. I think just like the JAM Trinity, you have the Bima Vistar, the Bima Sugam, the Bima Vahak, the Insurance Trinity, which the regulator has enabled. And honestly, I mean, the regulator has done whatever they can to make sure the industry grows. I mean, there is cashless, 100% cashless they're pushing. They're looking at a common network of hospitals for all insurers. So they're doing whatever they can for the industry, for the customers, for everyone. So I think regulator, in fact, has done a lot. I mean, I think they've been very responsive and quicker than most insurers, to be honest. I mean, as far as the government is concerned, then probably I think at a principal level, I mean, there are a couple of things which we might want to discuss. One is that GST on insurance, especially health insurance. At some stage, the government needs to take a call on whether they rather tax the industry and use that tax to provide people medical and healthcare facility, or rather increase penetration through the industry and be on side of the customer and make sure that the customer is treated well. Now, personally, my view is that they're better off delegating that to the industry and making sure that the customers are protected when there's a claim, and enable that by, you know, things like taking of GST, for example, rather than be in the business of business, as to speak. So, and similarly, we have certain distortions. I mean, one distortion that we have, for instance, is that in crop, we have something called the cup and cap model. I don't know whether you're aware of it, but it says that in case the claims, for example, are below 80%, you can't keep the profit, you have to give it back to the government. And if it's over 110, the government will pay. But I'm not really sure that's the best way to do it, because if the claims are over 110%, the farmer rather have the government go after the insurance companies and make sure that the claims are paid, rather than the farmer depend on the government to pay. And if the claims are below 80, if there's no skin in the game for the insurer, they may not do as much diligence to contain the loss ratio, say, to a 30 or 40, what will be. It's not out of intent or poor intent, it's just that, you know, the system of incentives have to work in a way where everyone is aligned. So some of these distortions, and obviously, you know, the larger decision for the government to take is that, you know, do you want to be the business of business, or, you know, they want to enable business and be on side of the customer. I mean, that's a choice.
That's a choice the government has to take in several businesses, and so...
Absolutely.
Right.
Absolutely.
Right. So, Anup Rau, thank you very, very much for this interaction. It was a pleasure, and I hope the government will listen to some of your thoughts and take some action there. Thank you all.
Thank you very much.